Okay, good morning, everyone, and you're very welcome to this morning's Coffee Microcaps Morning Meeting. For anybody who's joining us for the first time, my name is Mark Tobin. I am the founder of Coffee Microcaps, and you're all very welcome along to this morning's webinar. I'm just going to quickly run through a couple of intro slides, and then we're going to get straight into it with our presenter this morning. I would like to make a special mention to our sponsor here for all our events, RAS Research and Service. If you are looking for coverage on some small and micro cap stocks, both free and they have a paid subscription service, please do head over to the RAS website. As always, we welcome our friends from ASIC. If anybody is joining us this morning, you're very welcome. For people who might be joining us for the first time, or just a quick refresher, it's been a while since you joined us, companies we tend to have on here capped under 300 million in market cap in revenue and approaching cash flow break even, or indeed are already profitable, tend not to have stocks from the resource and biotech sector, what I like to call industrial microcaps, which kind of covers all the other sectors. That's technology, financial services, professional services, hardcore industrial companies, kind of everything else under the sun, basically. Structure this morning's webinar, we've got one company presenting, 20 minutes for the preso, 10 minutes for Q&A, give or take. Any questions you have, please type them in the Q&A box rather than the chat function. And please note the webinar will be recorded and it'll be on the Coffee Microcaps YouTube channel on Monday morning. Follow us. You can pretty much follow us on all the socials, Twitter, YouTube, LinkedIn, and I do write a free monthly newsletter, and the December one just went out yesterday. I'm delighted to be welcoming back Mark Reid, CEO of Verbrec. Been 18 months since Mark last joined us. So he's got plenty to update us on, and indeed plenty to update us on in the last 2 weeks alone. So I will stop sharing my screen and I will hand you over to Mark. You can bring up your slide deck and I'll let you know when I can see it. Yeah, it's loading now, Mark. Just give it a second there. Yeah, I can see the cover slide of the deck now, Mark. You can take it away whenever you're ready.
Slideshow, right. Track for let's have a couple of issues there. Let's try that. I've lost there. If you can't give me that. I know, we'll just get ourselves sorted out in that because it's like technical drama.
No worries.
Yeah, I know. Okay, well, we're in business. So well, welcome everybody, and thank you for your attendance today, and thank you, Mark, for the invite to speak today here at Coffee Microcaps. And picking up on your introductory comment, there has been an enormous amount happening in the last 2 weeks. But like most of these things, the last 2 weeks are the result of a lot of hard effort over 6 months and the rest. So, yeah, very excited to be here today to talk about what's been happening. And I must say, when we spoke 18 months ago, we got some fabulous feedback as well. So thank you for that feedback, and yeah, very very much enjoy being back again to talk at Microcaps. The presentation itself may contain forward-looking statements, forecasts, some pro forma financial summaries as well. The information should not be relied upon to make any judgments of future performance or results of the company. And at this stage, Verbrec's not providing any guidance, earnings or revenue guidance at this stage. So maybe a few words on Verbrec for those who don't know Verbrec. I mean, we're quite a unique professional services company. We operate in Australia and New Zealand and into the Pacific. Our core markets being in energy and mining, water infrastructure and defence. In all the 4 segments there, we provide essential engineering, that's studies and engineering services. We provide asset management services, as well as operations and maintenance of critical production assets. Our key clients look to Verbrec to assist in that navigation of the transition in the energy market, which is underway across the region, of course, leading to more sustainable mining, increased water security, lower emissions by substitution of interim gas supplies in lieu of coal, electrification, energy storage and automation. We offer services from due diligence and advisory through to innovative engineering, construction, commissioning, life cycle management, and then end of life support as well when plants are closed. We're providing asset stewardship to many of the region's most important industrial companies. Very much our vision is through our strong relationships that we build on trust. Verbrec enables a sustainable future for our clients and their customers. We operate under several sub-brands, those being in the engineering, the asset management, the operations and maintenance, and the training areas. We also now operate under another very well-regarded brand, that being Alliance Automation, but I'll come back to that a little bit later. Of course, Staxon, a mining stockpile software as a service product, and a digital twin product is, of course, another product we provide. And it's really through the strength of those client partnerships we have and our partnership approach that I'm absolutely confident, and I know we'll be successful in growing our business and leveraging the combined strengths of Verbrec's engineering pedigree and Alliance Automation's digital twin innovation going into the future. And certainly we differentiate ourselves in our commitment to partnering with our clients across the entire life cycle of their assets. A few comments on our financials. Financial year 2025 was a solid financial performance for us. It enabled us to resume dividend payments for the first time, that is, the first time since 2013. Verbrec produced its highest gross margins since 2015 and its highest EBITDA margins since 2013. At the very end of the financial year, our work in hand has grown since the last time we reported it, and a very positive sign that in what was a choppy market, we've demonstrated management's team's operational excellence of us and the implementation of our strategy to establish Verbrec as a leading professional services company across Australia and New Zealand and into the Pacific. Spearheaded by our executive team, we've certainly been able to realise a reduction in indirect and non-essential expenses, which have helped drive a significantly improved cash position year on year, ending the financial year with a very robust balance sheet position. Two very significant developments after the end of the financial year. The first of those was the divestment of our competency training business to Rely On. This transaction was completed literally earlier this week, last week, with Verbrec receiving $11.2 million in proceeds from the sale. These funds from the sale improved Verbrec's balance sheet, allowing us to invest in growth, both organic and through further value accretive acquisitions. The other transformative development, very excited by this, was the acquisition of Alliance Automation, a respected professional services business, very highly complementary from both the skills and geographic perspective with the Verbrec organisation. The Alliance Automation deal has been balance sheet funded with a small adjustment to our group financial facility to fund the purchase price and working capital requirements. No capital was raised or equity issued in securing this transaction. Verbrec now operates under several verticals, as indicated before: the engineering, the asset management, the operations, and the training. Each vertical works across Verbrec's entire geographic coverage. And excitingly, now we operate with another exceptionally important vertical, which is the addition of Alliance Automation. This deal was completed earlier this week, and Alliance Automation is a digital-first company with a strong focus on the convergence of information technology and operational technology, commonly referred to as Industry 4.0. They have a developing capability in machine learning and artificial intelligence, skills that are in high demand from our clients in Australia and beyond. I'm seriously excited for the capability that adds to Verbrec's repertoire. Better than ever, Verbrec will be able to meet our clients' needs across the entire asset lifecycle today and into the future. On a pro forma basis, the transaction is expected to add the order of $60 million in annualized revenue to Verbrec. That's quite a step change when you consider that our 2025 revenue was around about $86 million. It also increases our scale with a combined headcount now of the order of 700 people across 18 locations throughout Australia and New Zealand. Alliance Automation is one of Australia's largest independent electrical engineering and industrial automation service providers. The company was founded in 2010, and much of the management, including the current CEO, have been there since its founding. They've overseen its operations since Alliance Automation was a startup until now, and I'm delighted to welcome them to the Verbrec family. The specialised, innovative digital services that Alliance provide present massive opportunities in a high growth industry. Strategies employed by both Verbrec and Alliance Automation are aligned, and there's enormous rooms to leverage synergies. While Verbrec primarily, we generate our revenue and operate in the energy sector, Alliance Automation predominantly services the mining and the water sectors. This creates fantastic opportunities for us to complement, diversify, and balance our revenue streams. Verbrec stands as a robust, leading multidisciplinary engineering and asset management firm, while Alliance is more concentrated with digital innovation at the core. This alignment presents excellent opportunities for collaboration in enhancing our capabilities and engaging our combined client base. I've personally developed a very strong and growing relationship with the management team at Alliance and have absolute and complete confidence in their commitment and their ability to elevate the company to new heights. On this slide, we've used the combined accounts of Verbrec and Alliance Automation to provide a pro forma and indicative aggregation of the combined business. The right-hand column provides the aggregation on a continuing operations basis with the competency training business divested from the group. Alliance Automation brings a strong uplift in revenues and strong gross margins to the group. One of the key focus areas for us now is the realising of synergies from this transaction. We have an expanded national footprint and a large and growing client base, an improved combined capability set. We aim to increase our revenues by leveraging synergies with relationship clients and an integrated delivery model. It's important probably to take a step back and look at where we've come from. The margins, the management team here at Verbrec have increased Verbrec's own EBITDA margins from a net negative position in financial year 2023 to 9.2% in 2025. We've done that by being smarter about projects we choose to take on, delivering those projects more efficiently and effectively, and continually driving down expenses and overheads. For this reason, we are strong in our belief that over time we can realise synergies and bring the combined group's EBITDA margins to the 8 to 10% mark. That is our aim. And we're off to a great start with a combined work in hand over double what Verbrec had prior to this transaction. Alliance Automation over time has a strong revenue growth, has shown a strong revenue growth and a compound annual growth rate of around about 15.4%. Together and with a larger addressable market than either company has alone, we hope to secure greater market share and grow our revenues sustainably and profitably. Alliance Automation currently derives most of its revenue from industrial automation solutions, electrical engineering, and project delivery services. This is a great sustainable revenue base and currently makes up the order of 85% of their business. Verbrec does some of this too, though to a lesser extent than Alliance Automation. The smaller but faster growing part of their business is the operational technology and cybersecurity consulting, including developing capability in machine learning and artificial intelligence. This is the really exciting area with huge amounts of room for growth, as we'll see on the following slides. like I say, where Alliance Automation really excels is the convergence between the information technology and the operational technology, Industry 4.0, if you will. With every asset owner looking to leverage data to get the most out of their assets and legislative drivers to ensure security of critical infrastructure, this is an important and very desirable sector to be in and growing strongly. Cybersecurity is seen as the number 2 external business risk for companies and rising fast year over year. 95% of global manufacturers have either invested or plan to invest in artificial intelligence and machine learning over the next 5 years. It's a strong trend, and Alliance Automation is fantastically positioned to benefit. Really, industry's ability to benefit from this massive market disruption is really only limited by their imagination. There's a lot to be excited about, tremendous growth potential in the Internet of Things, cybersecurity, artificial intelligence, and machine learning in markets in Australia and beyond. Industry 4.0 is driven by clients who understand that it's critical to their future success to adopt new technologies, increase automation, and leverage data to make decisions and increase efficiency. Critical infrastructure providers also have a risk management responsibility, which is forcing a rapid modernisation of cybersecurity defences for operational technology. There is strong adoption and uptake Australia-wide, and there's a growing need for real-time data and information, providing great opportunities for Alliance Automation. The following graph here shows that the combined group has a more balanced and diversified revenue base. Some areas where Verbrec's not traditionally well known, like in manufacturing, Alliance has a much stronger presence, whereas Verbrec's capability is well suited to supporting clients in the sustainable mining and water security sectors. So there's lots of opportunities to cross-sell to those clients and increase that proposition. Similarly, there's great opportunities to increase Alliance Automation's market share in the energy sector by clearly messaging our new capability to existing relationship clients. We're really excited about the opportunities available to Verbrec with the enhanced digital capability of Alliance Automation. This is an important, very important step change for Verbrec. The transaction provides over 80% increase in revenues on a continuing operation basis. The work in hand position of the group has doubled, more than doubled, and Verbrec's exposure to automation, control, cybersecurity, data and AI projects is over 8 times greater. Truly transformational for the business that is Verbrec. So diving into a summary of our strategy that is setting Verbrec on a path towards a sustainable future for our clients. First, we signed an agreement to sell competency training to Rely On for $11.2 million. This sale is attractive as it strengthens our balance sheet and allows us to reinvest in growth opportunities. Second, our acquisition of Alliance Automation from Telstra will add the order of $60 million in annualised revenue and expand our team to approximately 700 members across Australia and New Zealand. The strategic alignment between Verbrec and Alliance Automation will significantly enhance our digital and automation capabilities. This positions us as a key partner for our clients. And finally, this acquisition not only expands our capabilities, but also creates synergies that will enhance our financial performance. Our management team has a proven track record of improving business performance, and we aim to increase EBITDA margins to 8 to 10% over time. These strategic changes enable us to pursue growth, deliver comprehensive services, and continue our journey towards sustainability. When we combine our capabilities, we can better service our shared clients and engineer innovative solutions for energy transition, sustainable and smart mining, and robust water security. So in summary, we're very excited about where the future of Verbrec's going, and I'd certainly like to take the time to thank you all for your attention today, and I move to questions and answers. Back to you, Mark.
Thanks, Mark. We've got a few come in here, and we'll just take them in order here. The first one is, for I guess, professional engineering services businesses like Verbrec, you know, getting people into the right seats and on client projects is, you know, kind of key to growing the revenue. But they're saying the question is around, you know, the current labour market, you know, that resource is quite constrained. So it's a question of how does Verbrec intend to attract talent to the business in order to, you know, execute on that, like, you know, pipeline of work that you've got in front of you, notwithstanding probably some of it can be serviced by the internal team currently, but I guess it's you're going to still need to attract a lot of talent to execute on what's ahead in the next 12, 24 months.
It's a multifaceted question and requires multifaceted answers, I guess, Mark. But probably the first thing I'd say is just to reiterate your comment. It's absolutely critically important as a business that fundamentally a group of highly talented professionals who serve and sell the services we provide to our clients. Absolutely critical to make sure that we have the right people providing the right services to the clients. So point number one. We certainly work very hard to make sure we have the right people in the business, and to attract, and one element is how you best attract people. We attract people to our business because we do very interesting and exciting work, and I think people actually, engineers, we look forward to doing interesting, exciting work. So that's one way of attracting people. Also make sure once they're here, they're trained and developed, so they don't want to leave, which is another important part to that question. And in terms of actually then how do we find additional people we will need to continue to do the good work and the growth that we're talking about, we work very hard at making sure that you know that we attract people because of the exciting opportunities. We look to employ graduates, bring graduates on as well. And we also look towards smarter, more efficient ways to do things as well that hopefully require less people to do more. And that's where some of the AI and the efficiencies come in there as well. And certainly generally in the marketplace, certain areas of the market are tight. So we do seek every opportunity to recruit people that we can, that we know of, to join us.
The next one is, are you still actively evaluating acquisitions post-alliance, or do you think you have sufficient capability and geographic reach now to execute the broader overall strategy?
No, we're very proud of our strategy and the journey we're on. So we are constantly evaluating sort of both organic growth and inorganic growth. A healthy business has a healthy amount of both, we believe. The first thing I would say is absolutely critical to our business to make sure the Alliance Automation integration is done well and we achieve the sort of the margin improvements I've just highlighted. But we are certainly on the lookout for other inorganic growth. We work with a lot of partners and have done over a long period of time. So we have a lot of interactions, a lot of connections with people that may ultimately be part of the broader Verbrec group. But there are some areas that we are particularly focused on at the moment, to give the viewers a bit of a flavour for that. Some bolt-on acquisitions around growing asset management, for example, one of the big growth areas in our business. Geographic expansion is also a focus, particularly as a springboard for the Alliance Automation business. And always looking for opportunities in the sustainability space and in the machine learning space as well.
And maybe I'll just skip to this one because we stay on topic. If I may, question around the motivations for Telstra for selling Alliance Automation. What was the kind of thinking, you know, behind them wanting to exit the business?
Yeah, probably a better question for Telstra than me, but in summary, Telstra had a strategy in 2025 that focused on providing more value into their clients. Their 2030 vision was more of a back to the core and in working with their communications backbone, and as such, that was their main focus. So as such, some of these businesses then didn't really fit within that strategy. So there have been a number of these businesses that they have sought to divest, one of which, of course, is Alliance Automation. We're very, very happy to have Alliance Automation join us, of course.
Yeah. Based on the pro forma revenue, let's say like 140, the question is how much visibility do you have on that? Or another way they're saying is how much is repeat recurring style versus, a project, while it might be multi-year, will come to an end at some point. So I guess maybe a split between asset management and pure project work, if that's even easy to break down.
We as a rule of thumb, about 60% of our work comes from repeat business. So it's continuing on to perhaps answer that question. We're spending a lot of time and internally very, very confident that the Alliance Automation business has very much that same signature, and we're very confident about sort of future workload. We do expect over time we'll be in a position we'll be able to communicate that more fully to the market.
Okay, great. These deals are all very fresh. So by the time I'm sure results roll around in February, Mark and the team will be able to talk a bit more clearly and with a bit more hard numbers, I guess, when we get to the results. Synergies, maybe a bit more of a deep dive into synergies. Obviously, you can get a few synergies from combining things like HR and finance and a few other things. But is there any other kind of major synergies you can talk to, Mark, about joining the two businesses, whether that's just leveraging one sales team to kind of really attack all of the clients that you're bringing and Alliance is bringing in kind of one fell swoop and with a more diversified product offering?
Sure, Mark. Yeah, I describe the synergy benefits like this. In terms of top line, we need to strive to make 1 and 1 equal 3, where we get the top line growth synergies. In the cost side, the synergies will give us 1 and 1 equaling 1.5, if that makes sense. So to address your top line synergies comment, a number of areas in a lot of areas we have some common clients, but this is Alliance Automation and Verbrec common clients. But when you look at those clients, there's very little overlap in terms of the services we provide to those clients. So we're able to offer a more complete service to those clients. And by offering a more complete service, hopefully that then enables us to develop more work out of those clients as well. So we look at expanding the relationships we have with those very good clients. In other cases, we see that we have a relationship with a client and Alliance hasn't traditionally, or vice versa, in which case there's enormous opportunities there to be able to provide additional services to the clients who either Alliance or Verbrec have very good relationships with already. So there's focus there. There's the other synergies we're targeting are around geographic synergies as well. With the expanded geographic base now, we have more offices where we have highly talented people that are very close to our clients, whereas maybe we didn't have in the past. And that's before we get into the wonderful synergies around the enormous capabilities that Alliance Automation have in that cybersecurity, artificial intelligence, knowledge management areas as well, that we see can go more broadly across the business.
Mark, we've had a kind of a run on questions coming in there, but we are pushing up on time. Can you hang on for another 5 minutes to tackle a few more of these?
Of course, for sure.
Okay, I just didn't want to go over without asking. Just on that one, if we can stay on top line. Have any existing clients of Verbrec maybe in the past expressed a need for Alliance's services already, but at that point in time, you weren't kind of really able to offer it, or maybe offer it on a kind of reduced basis? So
the answer is yes. You respect sort of elements of confidentiality in terms of naming those clients, but absolutely.
No, sure.
I can think of half a dozen easily where where we have got good relationships, and yet we can see that those clients have additional projects or additional tasks or additional challenges where we've been unable to support them in those areas. And interesting enough, in some cases we actually had looked at Alliance as a potential partner to try and fill that gap. So now we have that full suite offering, which is certainly attractive to those clients, and we've had some very, very positive feedback from those clients.
Yeah, and there's two questions here. Just in the interest of time, I'm going to combine them into one. Just around the margins within Alliance, there's a question or more of a statement. The Alliance margin, I'm presuming they're talking about EBITDA margin. Looks low at present. And then the other question is around, how do you improve the profitability of the Alliance, coming out of a much larger business in Telstra into, a more smaller business like Verbrec, where, there's much more of a kind of a partnership with the team coming in between, yourself and the rest of the senior management team at Verbrec.
Sure. I think part of the answer is indeed in the way you frame that question. A couple of comments I'd make about the Alliance Group is the gross margins. You'll note the numbers we've shown are very similar to the Verbrec gross margins. So the reduction in the profit has been in the cost side below that gross margin. When you look at the Alliance Automation business before it joined Telstra, it was making quite healthy margins. So we see the opportunity to bring the Alliance Automation business back to those more healthy EBITDA margins based on being part of a Verbrec organisation rather than perhaps the larger Telstra vehicle.
Yeah, and then we have another question here. There was a couple of delayed projects which slightly impacted, notwithstanding the kind of very good results in FY25. Just a question on any learnings from that experience as you kind of move through FY26 with now a much bigger order book that kind of needs to be executed on post this acquisition.
Yeah. Probably just an introductory comment there. I mean, those projects in the main haven't gone away. They just ran down the road a little bit. So we still have those projects on either supporting them in some cases or watching them and working with the clients and others. So point number one. Point number two is the market has its ups and downs, and we need to understand that as well. This certainly with a larger base to work from, with a larger client base, there is a greater ability to sort of insulate ourselves from some of the changes when you're a smaller company. So we're working towards that as well.
And then maybe this will be the final one. If you look at the combined business, top 5 clients by revenue, can you talk? Says quantitatively, I don't know how much you can, but to the outlook for client spend with Verbrec over the next 1 to 3 years, and I think this is maybe linking back to the slightly delayed project. Headwinds for those clients, whether it's project specific, regulatory specific, whatever might be causing a delay or potential delays that might flow on from regulatory changes.
Yeah, I mean the risks are around geopolitical, of course. A couple of our projects are defence projects that were influenced by some decisions across the Pacific. But in the main, when you look at our core businesses now, and I'm including the combined Alliance Automation Verbrec businesses, we're still seeing a lot of strength in gas transition areas. We're seeing still strength in electrification. We're seeing strength in mining, particularly the sort of critical minerals, and we're seeing strength in the likes of water. So we remain optimistic about the future, cautiously optimistic, I should say, but we remain optimistic about the ongoing opportunities and growth of Verbrec as a result of the markets we're in. If I could quote an example that I think shows some of the areas that we work in that are really are great areas to be operating in, and are key markets to us, and are great in terms of potential growth. The biogas area is one. We combines our sort of sustainability focus and our gas focus. Whether in the biogas area, but the viewers here would have probably seen some announcements from the New South Wales government in terms of promotion of biogas now as an alternative gas. That's an area we're very strong in and we see as growing. So there are a number of areas like that we're quite excited about the potential that's in the market for us going forward.
Okay, perfect. Thanks, Mark. We'll leave it there. I think we managed to squeeze all the questions in. Thank you very much for joining us, and hopefully we can catch up maybe after the half year result when things have settled down a bit and you've got the Alliance Automation team kind of more in house for a couple of months.
Great, shall do. Look forward to it. Thank you, Mark. Thank you, everybody.
Okay, I'll let Mark go there. No doubt off to the Ashes there to Gabba, and I'll wish everybody a good Friday and enjoy the weekend. Thank you.
Go the Aussies. Thanks. Cheers. Thank you.